recording, and we are recording. Good afternoon, everybody. This is Dennis Wilburn from the Active Trend Traders, along with David Grandy from allabouttrends.net. How are you doing today, Dave?
I'm doing great. It was a great week. How about you?
It was a fantastic week. We're going through some exercises of doing some pre-launch premium service with Active Trend Traders going into the 1st of July when we'll launch the full-blown service. But it's been absolutely fantastic. Sending out a lot of alerts, got some good fills this week, and so it's exciting.
Yeah.
And I find it kind of interesting. I got a couple of slides here, David, that are going to talk about that. Is what we were, it seems like such a short time ago, like about 5 weeks ago, on these afternoon, stock talk, webinars, or market stock talk webinars. That what we were talking about is, the market's not doing anything. It's in the downturn. Hey, next week we're going to go to the beach. I'm going to play golf. But now we've had a nice reversal, and we're back into a confirmed uptrend.
Right.
So I want to remind everybody that Dave and I are not making any recommendations on what to buy and sell. We're sharing with you what we're buying and selling, but that the material that's presented today is for training purposes only, and that if any of these systems are new to you, please paper trade it first before you risk your own personal capital. So I left this slide in. This is a slide from May 23rd. That's that is 2 weeks ago, Friday 2 weeks ago. And we were getting ready to celebrate Memorial Day, and both David and I and Dave's partner Harlan were saying something is going on with the market. There's something different. And so, the NASDAQ did something different, the Russell did something different, and the Dow and the S&P were doing something different, noticeably different than what they had done in the past weeks. And so it kind of gave us some clues that maybe the spring was tightening, and that we were either going to get a nice move to the upside or the downside, but the spring appeared to be tightening. I left some of the comments and we had in from last week. Today, of course, is the 6th of June, but last Friday was the last day of May for trading. And I posed the question, do we sell in May and go away? And we posted that basically the keywords for going into this week is watch for the market to digest gains, and for us to be patient. And this week, after the market digested some gains, the S&P and the Dow were up and away. We'll see in the charts here shortly. NASDAQ finished the week just a stone throw away from the year's high. Now this may simply just be a summer rally, but the summer rally could last for several more weeks. We tend to run into doldrums towards the end of, towards the end of summer, August, September time frame. But it would be kind of cool to get a pullback then. That would set us up to go into the end of year rally if the market does repeat what it historically does in the past. And then the Russell finally joined the surge to the upside. So that's absolutely fantastic. So let's take a look at let's take a look at the charts. I know David and I are going to both talk a little bit about Tesla a little bit later on, but let's take a look at the S&P. On the right-hand side is a weekly chart. On the left-hand chart is the daily chart. For several weeks, and actually several months, I've been talking about that it appeared that the S&P was working within an expanding top, which typically has a bearish connotation. However, with this explosion out of the top side, I am taking the expanding top off the table, and this trend line here is gone. And we'll start looking on. I will start charting different types of trend lines, but if anything, that line of resistance that I just deleted now becomes a line of support. support for potential bounces. We go into next week. Clearly, S&P is extended from both its 8-day moving average, its 20-day moving average, and its 50-day moving average. Is it going to just continue to defy gravity and push higher and higher? We don't know at this time. But I want to share one other chart with you as you consider what's going on next week. And this is a chart that one of my trading colleagues and a guy that I do a lot of research with that we use. And this is basically the number of stocks above their 20-day moving average. And as you can see on the NYSE, and it correlates to the S&P, and it's much better at predicting bottoms, and you can find this stock on I'll give barchart.com. It is great at predicting bottoms, and over the past few months and almost a year, when it gets up here in the where 80% or more of the stocks on the NYSE are over their 20% moving average, we will tend to get at least a consolidation or a small pullback. We finished today at about 78.72. I'm not saying that we're going into a pullback immediately next week, because it still has some room to the upside. But if you've never considered this chart or taken a look at it, I would suggest taking a look. Go and taking a look at it. It's like I said, it's been very predictive, especially when it gets down here where the percentage of stocks over the 20 gets below 30%. Been very predictive of bottoms. So I don't know if any of you have ever seen this chart, but I find it handy in my analysis. Let's go on to. Have you ever seen that chart, Dave?
I have not.
It's a good chart. It really is.
Yeah, that was nice.
Let's see. Let me. Oh, yes. Oh. Sarah Anderson, and you go blank when you're trying to think of a ticker. What do we get? A couple of weeks ago, we got the breakout of this little triangle here. We provided everybody last week that the upside target from this breakout was actually up in this area up here. And that was simply by taking this measurement here and then extending that to where it broke out. And it actually came up into this area. So we get a gap up for the day, and it's continuing to run higher. It has blown past the magic fib box that you'll see on the Russell here shortly, but the NASDAQ got in gear this week. And this lower channel line that had been basically acting this past couple of weeks as resistance has now been broken through significantly, so it is gone. And we'll look at other areas of support and resistance as far as trend lines go moving forward. But right now, that has basically been deleted from our consideration, and we will, again, lay in the shorter-term trend lines to predict, not predict, but to establish our lines of the sand for any type of trading with the composite. Then Russell. We were talking last week a little bit about how the Russell, there were several stocks that were emulating the Russell, where they had broken out initially from this trend line, but then they immediately went into another little consolidation pattern. Well, we get a great bounce off the 200-day this week. And it was a hammer, followed by a bullish engulfing sign pattern, which basically was saying, buy me. And if you were trading the Q, or no, not the Qs, but the Russell RTNA, you were very pleased with what happened over the next couple of days. Just taking a look at the Russell, what we see here, the little purple box here you see, that was the magic fib box for the retracement, for Fibonacci retracement from the high point here to the low point here. It stuck its head out the top of the box, but still finished within it. I'm not going to say that's a bearish or a negative sign, but it's still, it was strong the last 2 days, and we just will look for the strength to continue. We may get a pullback from a higher pullback off a high which we had over the last few days, but this bounce was substantial. Any questions on the markets, guys? What do you think, Dave?
Yeah, it was awesome. Particularly the Russell yesterday. That was amazing.
Yeah, the Russell, and what I love about this is, I trade candlesticks, candlestick technician, and this little setup down here, it was screaming, do something, and we sure, we did, and some of our subscribers really picked up a nice little gain over the last couple of days. So, David, I know you guys had some great calls this week. Why don't you push the go button and share with us what you have? I'm going to switch to you. I'm going to mute myself. I'm going to mute myself. If anybody has any questions, just shoot me an email or shoot them to me on the message board.
Yeah, it was a fantastic week. Last week we had started off by saying that we expected to get some consolidation, further consolidation, and we got that the first 2 days or 3 days really, and then boom. Finally, some buying with conviction yesterday in the markets, and as well as many leading stocks. And most of the setups that we had in our newsletter triggered, took off. Green Mountain just blasting higher into the close today. That caught us by surprise, but it was definitely, the pattern was definitely there. So, and then a few months ago, when we were doing the webinar, I was vacationing down in San Diego, and I'm like, hey guys, I just got out surfing a terrible beach, which reminds me a lot of what the market was at the time, really choppy and full of, major cross currents, and it was just really difficult to get a good wave or anything. Well, it's completely different now in the market where, wave after wave is rolling in, meaning stock after stock, setup after setup is coming at us, and they're triggering and they're giving us really good rides. And so this is exactly the type of market we want to be playing in, and it's really fun to be in it. So just going back to the things I usually start off every week with, 3 things you need to know to be successful in the market: uptrends and how to trade them, downtrends and how to trade them, and changes in trends. We've had our change in trend patterns. We talked about those going from down to up, and we did really well with those. And now we've got more uptrending patterns that are triggering. And if you like to short, there's really not a lot out there right now. So it's pretty much all about uptrends. And there's 2 common patterns that we look for in uptrending stocks. One is a pullback off highs. We're looking for stocks that are above the 50-day and confirmed uptrends, pulling back in an orderly manner towards support, which is typically a trend line or the 50-day moving average. And this is just an example, Alliance Fiber Optic Products. We featured this in our newsletter a couple months ago. The break above the pink line was your trigger, and here we are just trading very nicely in an overall uptrend. And this is exactly a perfect example of how to buy leading stocks at alternative entry points. And we talk about that a lot because we are big believers in Investors Business Daily and their system for finding good stocks that have good technical action and fundamentals. The difference, though, is we would rather buy stocks at alternative entry points that are closer to support, which, as you can see, where this pink line is in the trigger, is it closer to support or more closer to resistance? It's closer to support. So if we get stopped out, a stop out would be a break below the green line here. It's only going to be a few percentage points at the most, versus getting stopped out simply based on price, because the price of the stock is now 8% below my buy point. We're getting stopped out based on technicals, and since we're buying closer to support, our loss is a lot smaller. You can get stopped out buying a typical IBD breakout and get stopped out at 8%, but the overall trend of the stock could still be intact technically. And we've seen that happen many times. Alliance Fiber Optics is a perfect example of that. Because it broke out of a traditional IBD buy point, it broke out, and then it retraced all of its gains, and which triggered one of their sell rules. But if you look at it, the overall trend of the stock was still intact. So that's the difference that we do it. We do it just because we find it safer, and again, you're making buy and sell decisions based on technicals, which is versus based on a price. And their 8% rule is a great rule. It's designed to protect your capital, but we kind of do the same thing, except it's just at it's usually typically lower when we get stopped out, so lower, smaller loss. And Dennis, you said you did some analysis of your portfolio,
Yeah.
And what was your average stop loss?
Yeah, David, we've gone back and both myself and my research partner, we go back and we do a lot of back testing and modeling and all that type of stuff. And we went back and just picked at random, picked some of the IBD stocks, basically the first stock that appeared on the IBD 50 list each year, going back to 7 or 8 years now. And what we found applying, similar type of system, buying the bounces, buying, off the bounces, that kind of stuff. The average stop loss, or that was hit, the average loss was of around 3.5%, but the success ratio was about, a little bit over 65% win-loss ratio. So yes, I did.
Exactly.
Sorry for the verbose answer.
No worries. And as long as you're, managing the overall trend, you should be, seriously outperforming on the winning stocks what you're losing when you do get stopped out. I mean, it's IBD talks about having a 3-to-1 ratio, and so if you take an 8% loss, but then you make a 20% gain, you need to be right only a third of the time or a quarter of the time to break even. Well, I mean, here, if you're only taking losses at 3 or 4%, you're dramatically outperforming, the IBD way. So let's go into some stocks that are setting up. Now, this is Coors. It's setting up a traditional cup with handle base. IBD's got a buy point of 99.06 on it, which is the peak of this handle here. But as you can see, it's trading in a confirmed uptrend here, and it's pulling back within the overall trend to support. So am I going to wait and buy it here at 99, which is a resistance level, and it's also very far away from any kind of support? Or am I going to want to buy it here as it breaks above the pink line, confirming that it's making a new, it's clearing this downtrend that it's been in, and I'm also really much closer to support. So that's what we're looking for here. And then, we get in at, 94, 95-ish, ride it up, and then the breakout happens. Typically we're going to be up, 7, 8, 10%, right off the bat. So that's why we look for these alternative entry points. It's not to, to say, hey, we're better, we got a bigger gain. It's to say, it's just looking at it from a logical standpoint, from a technical analysis standpoint. You're buying up here closer to resistance, way far away from support, versus buying down here on technical strength when it breaks above the pink line, but it's much closer to support, and it has a lot more room to run. So that's the point we're trying to make in these webinars. So that's what we need to see with Coors. It was rallying pretty strong into the close, but it just kind of tailed off there. So we'll see what Monday brings. So we'll see if it gets some follow through on a decent day today. You can see it's trading really, after kind of being volatile after its earnings report, it's trading very tightly here, and volume is really, really low. So those are real good positives here. That's exactly the type of action we want to see, and it's just waiting for that technical event to occur to trigger our buy. The other pattern we look for is right side of the cup crossovers. We talked about this all last week. I showed you many, many patterns, most of those triggered. It's really a great way to buy, another great way to buy leading stocks at lower alternative points. Palo Alto Networks was a great example, and Dennis is going to talk about that later. So basically what we're looking for is stocks that are forming cup-shaped bases. So they have a left side, they have a bottom of a cup, and then they have a right side. And what we're looking to buy them is when they break above the resistance level that's formed the bottom of the cup. It's a very easy trade. It's a clear buy point. There's a clear stop on it. This is what Illumina looked like last week when we featured it in the webinar, and we got a move higher. Not setting the world on fire, so to speak, but it definitely triggered, and you've got all this remaining right side here to build before another resistance level comes into play. So let's look at GasLog. This is a stock that was on a tear. Everyone's like, gotta buy it, and we finally got it to correct, form the left side of the base. It's now building the right side. It's probably going to need a little bit more time. Ideally, it'd be nice to see it come down and retest this blue line again, the bottom blue line. And then when it breaks above this upper blue line, which also corresponds with the 50-day moving average, that's our trigger. That's our signal that it's building the right side, and that's where we're going to get in the trade. So, and again, here we are buying it, down around 25, 26, versus waiting for a breakout around the 28, 29 level, where we're not anywhere near any kind of support at all. So that's what we're gonna look for there, and it's high on our list. That and Chorus for sure. Facebook is another one that's looking good. It just kind of sat around all week. This one, it's we're just looking for that one to really get up and go. It's just like Chorus, it's just kind of trading pretty tightly here. So it's if it's going to go pretty soon, and that's high on our list as well. So that's about it. In summary, there's just many opportunities right now. It's a great ocean. You don't have to wait very long to take another wave and get a good ride. So we're just letting them come to us and hopping on when they let us do so, and then once we do that, we're just riding the wave as long as it goes. And what I mean by that is just managing the overall trend of the stock. Is the stock still on an uptrend? Okay, then that's great. What's the problem? Okay, so that's what we're looking for, and you can contact us allabouttrends.net. Send us an email, give me a call. I welcome that, and I appreciate the opportunity.
Hey, Dave, you still there?
I'm still here.
Yeah, we got a question. I know you're still there. We got a question. When do we sell? Or when do you sell? I don't know if that's directed at me or towards you. I know.
Well,
go ahead.
There's many ways. There's many opportunities. I guess I'll just go back to AFOP here. That's what I call it. I just will go by the symbols versus the names. Anyway, for me, you got a really nice gain up in here. It's always a good thing to take some gains. When you got them, you get double-digit gains or so. You can take some off the table. For me, I'm more of kind of a long-termer, so I'd rather, as long as the trend stays intact, I'm going to hang on to this position. The stop loss when I bought it initially would have been a close below, or not a close, but a break below this trend line, but that never happened. I have as much of a 25% gain here. I think it's about 19 now. It's just pulling back a little bit, but so for me, it's just anytime this stock breaks the trend line.
Okay.
And every day that doesn't happen, the trend line keeps going higher, which means the place I take my profits now is going to be higher.
Cool. Yeah. So and I think I can answer a little bit of that also as I switch over to my screen, if it's okay.
Well, and let me give you another answer too. On Illumina, that's a little different because here you have a clear area of resistance up here at a new high. or at the old high. So, you know, I would be looking to take my profit there as it hits resistance. Same thing with Facebook.
Yeah, and
GLOG.
Yeah, GLOG. Let's see. Wasn't there GLOG has a brother or sister stock now, right? It's GLOB.
Yeah, they just
GLOB.
Launched, yeah, exactly.
I think it's GLOB. It's fairly recent, and that may have been for some of the depression for GLOG.
Mm-hmm.
And so GLOG and GLOB apparently pays like a 4.5% dividend. I'm not a dividend guy, but I found that interesting. So anyway, to answer your question also, and Dorothy, I got your question. Rob says, well, if you get a break below the 50. Typically, Rob, if I get a break below the 50, I have screwed up because I want to keep as much of my profits as I possibly can. And so that's why I do, with the active trend trading system, I utilize basically my account is split into, I use, the 8, that's what I use, the 8 EMA, and basically it's if I get a close below the 8 EMA, and the low of the day it closes below the 8 EMA, if that's violated the next day or subsequent days, that's my exit point. But I will also have what I call income generating trades, and I'm just showing you a little bit of, here's the trades for the week for the active trend trading system. I will have specific technical targets based on either measured moves and or areas where I'll run into resistance to pull my profits off because I like generating some income on a weekly basis or a monthly basis. And so here's some of the trades we did this week. And I will do that by either selling puts or doing a certain kind of spread on a weekly option. And so this week we had some nice stuff. Tesla gave us a really nice bounce up, gave us $400 profit per contract. And then Palo Alto Networks, which I'll show you the chart here shortly, I took some profits off when it was up around 77 to 78 this morning. Gained $4.57 per share, and that was and I basically sold half the shares that I had, and then our existing, these are our long positions that we're maintaining right now. TNA, nice call on TNA, and I want to say Panera Bread, but that is, I know it's the Palo Alto Networks, and then Jazz, and then I'm looking for WUBA. I do that too, Dave. I just pronounced the name of it.
It's easier.
It's built one of those right-hand side of the cups thing that you're talking about, Dave. And I'll probably have a tendency to get in just a little bit earlier. But if I get again, I've got a tight stop on it per my rules. And let's look at a couple of these charts just real quick. Let's take a look at what do we got. Up first, we have Palo Alto Networks. Palo Alto Networks, I saw from last week, gave 2 potential entry points. On Monday, it came down and busted down below its breakout level of 72.50. However, the next day, that point held, and so there was an entry almost at 72.50. The low that day was 72.61, and actually off this rebound this day, I went ahead and there was an entry there, coming back up through that at 72.50, 72.55, but then also there was the entry when it broke through this pullback little bull flag on Wednesday of this week. I took off part of the position when it got back up here to 78, and I think I got at 77.16, because basically what I've got now is I've got a doji candle at a resistance area telling me that I'm at least going to slow down. But I only took half the position off because this is in a very nice uptrend, but I'm also running into resistance over here. So I'm going to be watching that closely, and on the rest of my position I apply my 8-day moving average rule. What are some of the other things we looked at? TNA. TNA, I love the trade TNA for cash flow trade. Whoops, not TN. TNA. The cash flow trades. It gave us a couple of flashes this week also. I will trade it off of the Russell, though. I'll use it for its moving averages. But we couldn't argue with this clear breakout above 69.80 yesterday. But it was giving us a tickle down here about 68.71, and it's launched up. The measured move from here to here, you extend that to this breakout, actually puts us back up in the $86 level, $85 to $86 level for a potential move if we get a stronger summer rally. And Dave, I'm not going to, Jazz was one of the other ones we were looking at. It finally gets a nice little move up and has moved up above 100 today. And we were looking at it back here and picked up the shares at a little bit over 141. And also another buy opportunity about 145 as it broke through the 100-day moving average. Got resistance here, but this is a classic double bottom type formation. You can see the double bottom. And when I say classic, typically from the middle point of your W, this retreat is about 20% on a normal or a traditional double bottom, which is different than the double bottoms that are patterns that are highlighted in, for IBD patterns. So I just want you to be aware of that. So a measured move from here to here, if we get a breakout up here, puts us right back up in this resistance level up here. Amazing how that works. And so right now it's just being, a steady eddy moving up the right-hand side of the double bottom pattern. Officially it's not completely a double bottom pattern until we get a breakout above 149.47. Lastly, did I erase all that? Now, David, I know you've been waiting for this chart because I know you've got a copy of it also, so we can bounce back and forth. How about if I hit my part first and we can bounce back to your chart, if that's okay?
Sure.
Okay. Basically, guys, Tesla did we talked about this last week about how it had gone up and did almost a 20% gain from the lows it hit down here when it was bouncing off the 200-day moving average, moved up into the Fibonacci box, the magic Fibonacci box, and then this past week has spent most of its time digesting, pulling back down below the 50, back below the 100-day and the 8-day, but it puts in a hammer-like candle here, or a spinning top candle here, and then rebounds yesterday and today, but it's doing it with a lot of effort. But what the price action over the last week and a half has done for us, it's allowed us to pull in another trend line, whereas if it breaks above this, we've probably got a good chance to go at least to the top of the fib box, which is back into another resistance area. But for me, Tesla's looking really good, but it's digesting its gains. We've got some good movement off the stochastics. Volume is a little bit low, but that's what I'm looking about, Dave. Do you want to show them your chart, man?
Sure. Yeah, I mean, it looks a lot like Facebook and Coors, where it's just trading very tightly right now. Volume is pretty, is not extraordinary in any manner. So it's just kind of like a coiled spring that just keeps getting wrapped tighter and tighter, and we're just waiting for that break. There's a couple of resistance levels here. You have the pink line, then you have the sky blue line, which is the right side of the crossover. So it's not as clean cut as some of the others, but it's setting up nicely. It's just a matter of when it's going to go and how is it going to find some immediate resistance here at this light blue line.
That sounds good, Dave. I mean, yeah, it's amazing how that it could be setting up really well. And one of the things that I like to do with Tesla, Tesla has great weekly options.
Mm-hmm.
And so I will go, when I'm seeing the pattern set up on the daily chart, I'll scroll back to the intraday, either hourly or half-hour chart, and use that to gauge putting in credit type trades utilizing the options. And so, like I said, it's great for income generating type trades, and because the weekly premium with those, for those who like to trade options, the weekly premium for the Tesla is quite rich. And even if you're at or slightly out of the money, and if you're in the money, it's and you've got a, where you're moving up nicely, like up to the 210 level on Tesla, 210 to 215 now. That makes some interesting possible trades, but I'll use my intraday to help me time my entry. So let's see. And we've got also some folks trading the weekly, the Tesla. Oh, yeah. No, they said that they like the Tesla weeklies also. So, David, you got any more stocks to look at?
I do, but I think for the purposes of time and stuff, I think we've shown them quite a bit.
I know.
If you want to see more, we have a 15-day free trial on our website. There's no credit card or anything. Just go on and give us your email address. We'll send them to you for 15 days to get everything our paying subscribers get for that time window, and it's the best way to really see everything that we have to show you and trade in tandem with us.
Yep, that's awesome. And then I'll just shoot this slide up here right now, some of the things that are happening with the active trend trading in June with some trading alerts. We are also pre-launch on our premium service, and finish off with this great picture of David and this. How come you look better than I do, David? It must be because you're a lot younger, right?
I think you're having more fun than I am, though.
Yeah, I am at a castle in Germany, and I've got my Thinkorswim platform on my smartphone, and I just am having dinner with my wife at this castle, and I just got triggered on a conditional order, and it was a very successful trade. So yeah, I was really happy too. So
yeah, there you go. Didn't that trade or a bunch of trades pay for that whole trip?
It did. It did.
Yeah.
And so, hey, here's David's contact information, his phone number at allabouttrends.net. Here's my information down here with my phone number. Yes, this is my business number, and it's in Hawaii. It's my Hawaii mobile number, and that's because I lived in Hawaii for quite some time. So, and I maintain my mobile number from there. But give us a call. I know Dave likes it also. Hey, before we get into some more random stock reviews or requests from everybody, David, anything else exciting going on?
Well, we had a request, a few weeks ago?
Yeah, several weeks ago.
If we were going to, merge or offer a tandem service or something, and we have since discussed that, and we are proud to announce we will be doing, we're not going to merge, but we're going to offer a combination subscription. So our price is regularly $49.99. That's what Dennis's premium price is as well. But if you sign up for both, you get both services for $49.99. So basically, you're saving 50%, and you get both services. Or you sign up for one service, you get the other for free, however you want to look at it. So for $49.99, you get both of our services. We will have that out soon. Our web people are feverishly putting that together, and hopefully as early as next week, we'll have that ready to launch for you guys.
Now there's a limit on that, right, Dave? I mean, a limit to who we're actually offering that to. We've got an audience. Who are we actually offering that to?
Yeah, good point. It's only available for those of you that are on our webinars here. So very limited audience, and it's very exclusive, and it's just our way of thanking you for being here and being participating and asking questions, and we just want to give you guys the best value we can.
That's awesome. And so we're going to be announcing either next week or the week after to actually launch it. And so
yeah, and it's only going to be on the webinars. We're not going to have it on. I'm not going to have it on my website. Dennis isn't going to have it on his. It's,
nope.
it's only you only get it here, and we'll have the unique way to sign up for it.
Okay.
Hopefully next week.
That's cool. So.
Yeah.
Okay, David, I'm going to stop the recording and look at some charts that the folks want us to look at. I know there will be some questions coming up. There's be some questions coming up from folks about, well, what happens if I'm already subscribed to one or both and all that kind of stuff? How do we merge and all that kind of stuff? And we will work that out. I don't know